Ladies and gentlemen, a good cryptocurrency analyst, and a good analyst of anything, whether it be philosophy, whether it be politics, whatever it is that you're debating, doesn't just focus on why their arguments are good, they focus on why the opposing argument is bad, right? And they give credit where credit is due. It's very, very important to look at the other side. That's what we'll be doing today. We'll be assessing some of the bearish claims, poking holes in the bearish claims, and showing you ultimately why the bullish claims are better, but also giving them credit where credit is due. So we'll look at the Bitcoin bearish monthly candle. We'll look at the stochastic RSI, which is flipping bearish right now. We'll look at the weekly chart bearish divergence. We'll look at unemployment rates. We'll look at the DXY, which is acting abnormally in relation to risk on assets, which could be a warning sign for Bitcoin. We'll look at all these things, which suggest that the market is weak, and I'll show you why I think they're wrong. Before we get into it today, guys, go ahead and check out the two exchanges that I advertise on this YouTube channel. The Bitcoin exchange, which is global non-KYC. You can access it from anywhere in the world. It's never been hacked before. And with my referral link down below, you can get a 15% trading fee discount for life. Or BitGet, which is a very big exchange. It's global except for the USA. And just like Bitcoin, you can get a 15% trading fee discount with my referral link down below. So it takes literally 30 seconds to sign up to either of these exchanges. Use my links down below for those rewards and discounts. Get on a good exchange. You're trusting exchanges with your money. You're trusting exchanges and you're paying the money in fees literally on a daily basis every single trade you take. So you want to be on a good one, and these ones are good. So links are down below. Let's get into the content. So starting out with the Bitcoin monthly candle, we closed a bearish monthly candle just a couple of days ago here on Bitcoin. We actually discussed this yesterday. I'll just quickly skim over my conclusion again. This candle here is what we call a shooting star candlestick formation, or something very, very close to it. It generally represents the top of large moves, and obviously we've been in a large move, and so seeing that candlestick formation is triggering some alarm bells in a lot of analysts in this market right here, but I really want to reassure you that it's not a big deal, and I'll show you why. Dwelling on candle closes and ignoring macro structures is a very dangerous game. And we saw people playing that dangerous game earlier last year in March. We had a 2-month bearish doji candlestick formation. Not quite a doji, but something akin to it. Essentially, it marked the top of a massive move on Bitcoin. A lot of analysts, including people like Crypto Crew University, with literally hundreds of thousands of subscribers and many other people who followed his lead, said that was the top, said we were going to correct massively from there, said we we're going to enter a bear market, okay, or at least very much put it as a possibility. I was sitting here saying, guys, trust the macro structure, trust the 4-year cycle, trust the fact that nothing is broken, all of our structures are intact. You can't really just simplify and dilute TA down to one singular candle on an abstract time frame, which historically hasn't worked, by the way. I mean, you look at the 2-month chart, you look at this bearish engulfing candle right here. We didn't see any continuation downwards. You look at this bearish, this bullish doji candle, 2 of them right there, reversal patterns. We saw a continuation downwards, and on the continuation downwards, we saw a bearish divergence, and we didn't continue downwards from there. So just over and over again, you see these 2-month candles, and the same thing with the 1-month chart. These 1-month candles not doing what they suggest that the chart should do, and not, accurately depicting future price action, and yet people still trust them. And why are they trusting them? Well, they're trusting them because, first of all, it's simplistic. They don't need to do excessive work. They can just look at it and point at it and say, oh, everything's going down from here, and they don't have to do any other TA. But secondly, they don't truly understand how powerful macro and cyclical structures are. And they don't know how to validate breakdowns. So it's all well and good pointing at this monthly candle and saying, oh, Bitcoin's entering a bear market now. But until you actually see the structural breakdowns, until you actually see Bitcoin plummet below its prior support at 74K, nothing's happened, right? It's like something's happened. Yeah, we've seen a candle close, but nothing's actually happened. We've just seen a candle close. And we can show you, 4 or 5 different time frames which have seen candle closes that are actually bullish. Does that mean we should trust them? Who's to say we should trust the monthly chart over the 3-month chart candle, over the 2-week chart candle? These candles are bullish. Why are we trusting the monthly chart candle? Is it because it sounds nice? Is it because it fits a bias? What's the reason here? So it's just simply not a strong argument without confirmation. Now, if we do swing downwards and break some structures and start going into a downwards trend, cool, then we can talk about it. But acting like everything's over because we've seen one candle close, when we've seen these candle closes before and they haven't worked, is just simply ridiculous. So that's the first bearish argument, which I'll debunk fully. Now, another bearish argument is coming from the Bitcoin weekly chart RSI, a very popular chart, of course, the weekly chart, and the RSI in the weekly chart is very influential. Okay, we should be looking at the weekly chart RSI, and people are pointing to the fact that Bitcoin is, let's just zoom in just so you can see it nice and clearly. Bitcoin is now seeing higher highs on the price chart and higher and lower highs on the RSI. That's called a bearish divergence. That represents pattern of exhaustion. That represents exhaustion of a trend. That represents that eventually Bitcoin will roll over. This is an unsustainable trend. Now, why is that not concerning to me? Well, simply because I've seen it before, right? Simply because we see it every single bull market. The fact of the matter is, guys, of course the trend is unsustainable. We're in a parabolic bull market. Just in the word parabolic, it is implied that it's unsustainable. Of course, you can't keep going on like this forever. So it makes perfect sense that we're seeing a bearish divergence. That doesn't mean it's going to play out right now. That doesn't mean we're going downwards right now. And we see that throughout 2017, for example. I mean, look over and over again throughout the 2017 bull market. You know, what's this? Bearish divergence. That's a bearish divergence right there as well. That's a bearish divergence. We saw 3 of them just continuously going on and on until we finally broke down. And guess what? We didn't even break down while in a bearish divergence. We broke down at horizontal resistance in the RSI. So these things are very unreliable. Another example is 2021, just in every bull market really, there's examples. Bearish divergence right there, but we continued going upwards to a second leg at 69k, okay? And yes, of course, eventually we had a bearish divergence, which was, I guess, contingent in the breakdown, but that's the point, right? It's like, eventually we get it, but when do we get it, right? We had our first bearish divergence here in 2021, you know, a full year before top was actually in. We had them in 2017, again, like close to a year before top was actually in. The fact of the matter is a bearish divergence in the weekly chart is not concerning because 1, we already know the trend is unsustainable. That's part of the parabolic bull market. 2, it doesn't tell us exactly when the top will be in. And 3, they can drag on for very, very long periods of time, potentially even years, before they actually do anything to the price chart. Another example is right here. We went higher, okay? These 2 wicks right here, our first peak was slightly lower than the second peak, bearish divergence on the weekly chart. And in fact, the bearish divergence didn't even lead to a drop. We didn't even enter a downwards trend. We just continued upwards. That's an example of the cyclical power, the cyclical structure being much stronger than a simple bearish divergence. A similar analysis we can do is with the stochastic RSI. So people will look at the weekly chart stochastic RSI, they'll look at many different time frames stochastic RSI, and they'll show you that, hey, look, Bitcoin has reached this upper, overbought level on the stochastic RSI. At the trigger line, which is the red line there, the signal line has dropped below the upper range point, which generally represents a bearish trigger, and therefore we should be going downwards into a downwards trend. That's an argument people make. And of course, it's a silly argument. The only way we can really say it's a silly argument, and a very convincing way, is just by looking historically at how accurate the stochastic RSI has been. Not very accurate, of course. It's the stochastic RSI. It's a very inaccurate indicator. For example, we were in oversold territory for like 6 months on end without a bounce. Another example is right here. Oversold territory continued upwards another 20%. Another example right here. For example, we didn't even reach overbought territory. We went halfway up the stochastic RSI before correcting downwards brutally back down to the lows, which we held for around 8 months over there. I mean, just go back through the history of this thing time and time and time again. You see just failures for it to work. In fact, even in 2021, before that cataclysmic drop in the middle of 2021, which dragged the whole market 50% downwards, the stochastic RSI was saying we were oversold. So we could have actually, according to the stochastic RSI, we could have actually gone upwards there. So of course, this is not a reliable indicator. It's one of the most unreliable indicators in the cryptocurrency market and in TA in general. Now, here's where we get into some of the more interesting stuff, because I really do think that a lot of the bear cases on the Bitcoin charts right now are just purely ridiculous, fear, FUD, whatever you want to call it. They're just trying to get clicks and engagement. There's no reason to be bearish on Bitcoin right now. And I can say that objectively. It's not my opinion. It's just objectively true. And the reason why it's objectively true is, very clearly, we have the cyclical structure, which has been around for the entirety of Bitcoin's existence. Since 2012, since the first halving, the cyclical structure that has underpinned all macro Bitcoin price action is saying we should go higher. It's saying we should go higher throughout most of 2025, okay? This is not something you can rebut, right? This is an objectively true date range trend, the 4-year cycle. It's supported by presidential cycle. It's supported by the 18.6-year real estate economic cycle. It's supported by the trends within itself, right? This is an objective thing that says we're going higher. So, our macro trend is directionally pointing upwards. On top of that, there's no structural breakdown. So what we have is you can look at it from a different perspectives. You can look at it from this perspective with this major support stemming back from a 2021 highs, and you can see that's holding right now. You can look at things like, for example, the weekly chart Gaussian channel, which has triggered, by the way, once we've cut through it and crossed below it, the end of every bull market, historically speaking, on Bitcoin. You can see we've got plenty of room before that breaks down. You can look at just a simple support-based analysis on a macro scale. You can look at our previous resistance zone right here at 74K, and you can look at the fact that we're well above that level. So not only do we have intact macro cyclical structures, but the actual just basic TA one-dimensional analysis shows us that we're well above any area of risk. So to be bearish here is just simply unjustified, just objectively unjustified. You can be cautious, you can see some signs and perhaps, de-risk, but to be actually blanket bearish here is just stupid. There's no breakdown and the macro structure is bullish. So the Bitcoin charts are in the clear, and so that leaves the bears kind of with one place left to hide or to find support in, and that is traditional markets. And yeah, they can find some support here, but I still don't think it's that convincing. So for example, we look at unemployment. This is the unemployment rate chart, and I won't, I'll spare you the hassle of just showing you everything here. This will take 10 minutes for no reason. Basically, when unemployment spikes, right, it usually rounds out and spikes to the upside. It's done that 11 times historically, okay, since 1948. And about 7 of those 11 times, that has coincided with a bear market in traditional markets, okay? And hence with Bitcoin, because they move together. So 7 out of 11 times that unemployment has spiked, we've seen a bear market in traditional markets. Right now, it's rounding out. It hasn't spiked yet. It could potentially roll over. But if it does spike, there's about a 70% chance that we see a bear market in traditional markets, according to the historical analysis. And that's, according to some of the bears, they're saying we're going to see a spike, and therefore they're saying that traditional market's going to drop, that Bitcoin's going to go down, the 4-year cycle is going to break. Now, first of all, that hasn't actually happened yet. There's no spike, and we don't really know whether that spike's coming for sure. So that's the first problem with that argument. We haven't seen anything. They're just relying on speculative information. But second of all, we're actually seeing very big differences here between last times we've seen bear markets. So for example, if we overlay the S&P 500, what we can see very clearly is that, yes, we did see bear markets when unemployment spiked, but very notably, the traditional markets went downwards and entered a bear market before unemployment actually spiked to the upside. In some cases, up to 6 months before. You can look at 2007, 2008. We entered that bear market before unemployment was spiking. Same thing in the dot-com bubble in 2000. We entered that bear market about 6 months before unemployment spiked. And the same thing on basically every occasion you have beforehand where unemployment spiked to the upside and we saw a bear market. Guess what, guys? Unemployment's rounding out. People are saying it's going to spike, but the bear market's nowhere to be seen, okay? So this either means that unemployment is actually not going to spike, or investors are just totally wrong and they're completely buying into the euphoria, which seems unlikely, or this market environment, for some reason, is just dramatically different to previous market environments, and hence we cannot extrapolate these prior trends forward, which I think is the most convincing argument. The reason I say that is because the last couple of years is the first time the Federal Reserve has ever risen interest rates during a bear market, leaving interest rates in a very weird position in relation to risk on assets. This is a unique circumstance. We haven't seen this in over 100 years of data that I personally have. I don't think we've ever seen it before. Never happened before, okay? So there's a fundamentally unique circumstance. The main tool, the main weapon through which the Federal Reserve has to influence markets, interest rates, has been moving weirdly and strangely and abnormally in relation to risk on assets. Therefore, we're in a weird market environment. Therefore, prior trends, which would suggest that right now we should be bearish, aren't really valid anymore. We don't really know what's going to happen. We're in the dark. And so when you're in the dark with something like this, what do you usually do? Do you say that everything's going to crash downwards, or do you admit that you simply don't know, hence the data point is invalid, and do you cling to the data points that are actually valid, which is the Bitcoin 4-year cycle, which is the current cyclical structures across traditional markets, and which is the fact that Bitcoin is in an aggressive upwards trend with no macro breakdown yet? Of course you do the latter, sorry, not the former. The reality is we don't know what's happening with traditional markets. That's just the simple truth. We cannot know. There's no way we can know because we're in a unique market environment. We've never seen interest rates behave like this before. And the reality is, if we don't know what's going to happen, we have no historical data, all we can do is cling to what we do know. And what we do know is that Bitcoin is in a cyclical bull market. It's in an aggressive upwards trend. At the moment, it's showing no signs of stopping. Now, that could change, of course, if we break down below something like this support line, if we break down below something like 74K, all these things matter. And of course, we can adjust our viewpoint at that point in time. But right now, there's simply no convincing argument to be bearish justifyingly. You can be cautious, but being bearish here is just not justified. You know, even looking at something like the DXY, the DXYs could typically reverse correlate to Bitcoin, right? When Bitcoin goes upwards, the DXY is going downwards, historically speaking. That's been true for the entirety of Bitcoin's price action. But in the last 2 years, it's been acting strangely. In the last 2 years, the DXY has been going sideways and Bitcoin's going upwards. And now recently, the DXY is skyrocketing and Bitcoin's skyrocketing at the same time. It's like things aren't behaving normally, right? And that can be a reason for you to be cautious. Sure, you know, that's fine. But it's not a reason to be bearish because it's equally not a reason to be overly bullish, right? You can't get bearishness or bullishness out of uncertainty. When there's uncertainty, you can only cling to the things you are certain of, right? And that, in this case, is the 4-year cycle. So guys, that's my conclusion. Thank you so much for watching the video. I hope you enjoyed. Sorry if it was a bit confusing at times. There's a lot to cover here. I'm doing this very, very late at night as well. It's 2:30 a.m. The life of an analyst. So check out the exchanges, guys. Bit2Nix Exchange and BitGet Exchange. Global non-KYC from anywhere in the world you can sign up. Again, guys, you're trusting exchanges with your money. Literally, you're trusting them to keep it safe. Okay, you want to be on an exchange that has a good track record, and Bit2Nix has that. They've never been hacked before. Okay, they've got very low trading fees, and Bit2Nix and BitGet, you both get a 15% trading fee discount with my referral link down below, attached to your account for life, as well as thousands in rewards, literally from that reward center by signing up using my referral link for doing various tasks. So use those links down below. It helps me out and it helps you out by getting on a good exchange. And finally, the last thing I'll mention is the VIP group on Telegram, guys. Okay, if you want altcoin trading signals, you can get them on Telegram. I post them 4 times a week. Check it out if you're interested. Thank you, guys. Have a good day.